Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Jared W., Tim A., Dave V., and Paul M. On the program today is a new guest of a returning company. Mr. Greg Smith is here with us. Greg is president of Equinox Gold, a growing mid-tier gold producer with operating mines and development projects spread around the Americas, including Brazil, Mexico, California, United States, and now Ontario, Canada. Equinox Gold is a portfolio holding at SmithWeekly Research. The company is listed on the New York Stock Exchange under the symbol EQX and also on the Toronto Stock Exchange under the symbol EQX. Mr. Smith, welcome to the show. It's good to chat.
Morning, Andrew. Thanks for having me.
Well, Greg, let's kick it off here. Your mile-high view of the gold market here, and what words would you like to pass to investors about the status of the mid-tier and junior gold sector equities?
Well, on the gold market itself, we've been pretty happy to see the price action. In particular, in the last few days, gold is looking strong, and it's not that we predicted this, but we built this company in a gold bear market to take advantage of the gold bull market, and I think we're still in the early innings here, and it happened a lot quicker than we thought, probably with COVID coming. But I still think things look great for gold. There's sort of unprecedented stimulus programs around the world, explosion in sovereign debt. I think inflation is certainly becoming more and more of an issue, and all these things I think are going to be good for gold. So for gold, I mean, we're I hate to say we're perma bulls, but you almost have to be in this industry to an extent. And we still feel there's a lot of upside potential for the gold price. And then in mid-tier space, it's interesting. I've been a big believer in consolidation of gold companies. There's a lot of management teams, chasing a lot of assets, and you can really achieve some efficiencies and I think increase in valuations and provide more returns to stakeholders through consolidation. And there has been a lot of that recently, and you're starting to see a smaller pool of companies in the mid-tier space. Smaller pool of companies in the senior space, but as it always happens in a bull market, you're seeing a bit of an explosion in the junior space, and so over time that tends to correct itself, right, with consolidation up into the mid-tier space and then further into the senior space. But you look at our peer group, and companies are doing a lot of good things, right? They've got strong balance sheets, they're making good money at these gold prices. And many of them are building new projects, including us. So I think it's a pretty healthy market right now for the mid-tier gold space.
Greg, I appreciate your views on this, and we have a lot of room to run here on a number of things, and we are early stages. And given you bring up mergers and acquisitions, are you of the view that valuations are still cheap for purposes of acquiring pipeline development projects? And then also just touch a little bit more on broad sector M&A here at the senior, mid-tier, and also major level. Do you think these market conditions are still very, sound for acquiring value projects, much like Equinox has built a portfolio of generally bear market acquisitions thus far? What's your thoughts?
Yeah, it's a big question. I think that certainly in the gold space, the valuations of companies are well below what they historically should be given the gold price. So when you look at the population of gold companies in aggregate, I think that they're trading at very attractive valuations, particularly where the price is today and where I think it's going to go in the future. When you're looking at M&A within that space, of course, relative valuation is one of the most important aspects. And I tend to focus on more of a micro level, Equinox specific, and we kind of set our broad strategic goals, and then we look at things to buy that's going to move us toward that goal or achieve that goal. And we're always looking at two specific things. looking at transactions that'll increase our intrinsic value per share, on a per share basis, the gold in the ground, cash flow, production, net asset value, all of those things on a per share basis. But then we also look at things that we think are going to increase our multiple, our trading multiple. And particularly on a price to net asset value basis. And that could be different things, right? That could be geography or stage of development or, near-term cash flow. And then also the optionality that comes with increasing scale, right? Where you deploy your capital, whether you build or not build, and the optionality to then buy additional projects. So we look at a lot of different things. And so when you take that approach, regardless of where the market is, you can often see transactions that could add value to your shareholders and stakeholders. From Equinox's perspective today, we are trading at a fairly low, price to net asset multiple. That does make it a lot more challenging to do transactions that are going to be accretive. Not that we are, growth at any cost, but we're a growth-oriented company. We're open to M&A, but at this stage, particularly given what we're working on right now, I think we're probably less focused on it than we have been. But that's not to say that opportunities, if an opportunity presented itself, we wouldn't take advantage of it. So, it's kind of a long-winded answer to maybe a more straightforward question. But I think that whether it's a bear market or a bull market, if you're looking for transactions that add value, you can do it because relative value is a lot more important than absolute value, if you get what I mean.
Yeah, I think you're right. And we'll talk about the discount here in a little while as far as, Equinox general underperformance at this point, just, recently. I don't think that's, indicative of what's to come. But you bring up a good point. For example, the valuation change when Equinox spun out Solaris, the value of those assets at the time of spin out versus the value of those assets today, night and day difference, Greg, as you know. The Premier acquisition, for example, and then as you stated, there's still some assets out there, and I'm sure you and Christian and Ross know what those assets are that are in your jurisdiction zones that you guys like to look at that are still inexpensive today, and that to me makes a lot of sense. Even at today's prices, gold prices, those assets are still undervalued, big enough to make the needle move still for the company. But I've reiterated, and you guys know this very well, that during a bull market or periods of undervaluation, it makes sense to build that pipeline and to do it in a meaningful way. And it's just like, for example, if you look at the uranium sector, this is a sector that has not had any M&A consolidation during a bear market, which has been silly stupid by the actors in that space. Now, maybe that'll change. Whereas copper companies, gold companies, et cetera, some of them have made very smart moves, including Equinox here. So it is an interesting point in time for this market. You're probably new to some of our audience here. Why don't you cover your background for us real quick, Greg, and then also how you come to focus specifically on Equinox Gold, which is where you spend most of your time.
Yeah, sure. Well, I'm a chartered accountant by trade. I graduated from the University of Victoria in BC and then got my designation shortly thereafter while I articled at KPMG. And I was in KPMG's mining group in Vancouver. And so really have been in mining my whole career, first as on the audit side and advisory side. And then in 2006, I moved over to the corporate side and went to go work for Goldcorp for really what was a pretty brief period right after they had acquired the Placer Dome assets, and then I left shortly after the Equinox Gold transaction and went and became the CFO of a company called Minefinders Corporation. And we built a mine in Mexico, ultimately sold that company, and I took on some executive roles after that at a couple different gold companies. And then in 2016, we merged a couple of companies together with a plan to go, build a multi-asset gold company. And then in 2017 is when Ross, myself, and Christian Malau and Richard Wark basically founded Equinox Gold with a transaction that had us then trading right at the beginning of 2018 as Equinox. And Equinox really is reflective of, our collective desire to go build, a meaningful, profitable, multi-asset gold company of scale, and try and do it quickly, try and do it, effectively in a way that's positive for our shareholders and stakeholders. And at the time, take advantage of where the gold market was. It was trading, very low. I think it bottomed out there in December 2015, and things were inexpensive. There were assets available, and with strong shareholders like Ross and Richard and Lucas Lundin and other parties, we were able to pick up some assets with cash fairly inexpensively and build this company. But my goal personally, I love this industry. I love mining. I love the people. I love the whole industry in general, and in particular gold and precious metal side. And so I just really enjoy building these companies and improving mines and trying to create value in this space. And so for me, it's been great. It's my career's been very focused, but I've really enjoyed it. And I mean, as you know, Andrew, you kind of see everything in this space. You're always dealing with geology and metallurgy and social issues and political issues and jurisdiction and commodity markets and the stock market and financing. And there's just so many different aspects to the space that keeps it very interesting.
It's an incredible space, and it can do so much. Not everybody does this, but you can do so much with the economic improvement of countries you operate in, the local community enhancement that can happen, the money that can be made, of course, when the commodity cycles are correct and you do that right. And then on top of that, all of this is so critical for global infrastructure, global finance, whether you look at base metals, precious metals, which again are becoming metals that are used industrially as well. So important to just about everything. As you know, it's either mined or it's grown. And if it's grown, typically some of the stuff that goes into growing, it comes from mines. So it's a fascinating market, Greg. It really is. Well, on the personal side, give us a flavor for the Greg Smith portfolio. What natural resource sectors are you investing in today? We know Equinox is a large holding of yours, but maybe you can give us a flavor for your own portfolio.
Yeah, it's an incredibly irresponsible portfolio when you're a guy with a wife and kids and thinking about the future. It's almost 100% in natural resources and probably way too much on the speculative side. Definitely, the majority would be in my own, in companies that I have some influence over, right? So that would be Equinox, Solaris Resources, which we spun out of Equinox. I just participated in the financing for i-80 Gold, which is a new Nevada gold company that was spun out of our acquisition of Premier. I also, have got a bunch of different silver names and some smaller copper names as well, and also some of the sort of battery metal type companies. And I keep a pretty broad range of companies, and as you know, some of them do great, and often many of them don't. I like to invest at the private placement level or even pre-public, and I'm willing to take that risk and hold, for the long term and give good management teams an opportunity to execute on the business plan. So I definitely like, companies where I know the people involved. I know that, they're the never say die type of people that are gonna work hard and work for shareholders and all stakeholders and try to create value. And when it works out, great. And if it doesn't, at least I know they gave it their best shot. So, again, I stick with what I know, right? And like a lot of people do, and knock on wood, so far it's worked out pretty well for me, and hopefully, and I think we'll continue to do so. But you've got to have a thick skin and an iron stomach to invest in this space the way I do, and actually the way a lot of my peer group do. The people that I work with and associate with mostly say they take the same approach, right? As they take big risks, but as you said earlier, when the market hits, you can make a lot of money doing that. So it's not for the faint of heart, but it's what I know, right? And so I feel like it's a risk I'm willing to take because I can mitigate it with my experience in the space.
Thanks for sharing that with the audience, Greg. I appreciate it. Hopefully there's a couple of uranium stocks you're looking at as well to add to your portfolio, but that'll be a separate conversation. Certainly understand the volatility, fascinating market across the board here. So on Equinox, the company recently completed the acquisition of Premier Gold. Post-transaction, can you just highlight for us where we are on capital structure, including the cash, the shares out, and also the major holders at this point?
So we just closed that transaction right after Q1 there, so in early April, and that brought in the Greenstone Gold project in Ontario, the Mercedes mine in Mexico, and then some other earlier stage projects also in Ontario, Canada. And so with the closing of the transaction, common shares outstanding is just under 300 million. And we're sitting on cash of about 350 million. We've got credit available under our revolving credit facility of another 200 million. So we're well capitalized in terms of our liquidity. We've got our interest in i-80 Gold post closing, which is I think worth around 130 to 150 million Canadian. And the company's in good shape to finance whatever we need to finance in terms of our growth programs. So it was an interesting transaction for us because we were able to do it at an at-market basis, but with the SpinCo, the i-80 SpinCo, and when you take into account the value of that SpinCo and the valuation of the other assets, I think we got the Greenstone Gold project at a very attractive price. And for the people in Greenstone certainly, and the other stakeholders of that mine, with Orion as our partner, obviously we're totally financed to execute on that build. That's not to say we wouldn't look at potentially doing some debt financing in addition to that. We've got a very low, in fact, we have no net debt if you exclude our convertible notes, which are way in the money. So we've got some capacity to debt finance a portion of that build. But otherwise, we're in great financial shape in terms of our balance sheet. And I think we've been able to maintain a pretty conservative capital structure through this M&A process.
Greg, my question is on that, and it is a good deal, by the way. With the timeline you guys have, certainly the good potential for you guys to run the share price up, cash flows, gold price improvement, cash flows from existing operations, etc. It could be quite possible that you guys could advance this with very little debt, depending on the timing and depending on how things go with gold price and also the share price. Am I right?
Yeah, I mean, we model this a couple of different ways, and at spot gold prices, everything looks fantastic. Obviously, we have to prepare for a situation where gold prices could come down in the context of building out our capital program. So when you look at it from that perspective, it's not the worst thing in the world to have access to some additional capital. But you're right. I mean, if gold prices hold where they are and the mines perform the way we expect them to do it, then you could finance it 100% without debt, right? We could do it all internally. And our partner, Orion Mine Finance, they're obviously fully financed to take care of their portion of that capital build. So it's, again, I think we're in really good shape, but you always got to protect the downside risk. So that's an area that we do take seriously. And so we are, assessing what makes the most sense for Greenstone.
Yeah, it's interesting. I know you guys have increased your stake on that project as well. You have a good financier in Mubadala in the share roster already. A lot of good space there, a lot of deep pockets, if you will. On that subject to jurisdictions, you guys added Canada as a new jurisdiction for Equinox. With Greenstone now with Canada added in, there's probably a few places that remain on the table that you probably like. But let me ask you, as the time goes on here and you guys continue to evaluate the market and your projects, et cetera, and the jurisdiction risk, would a place like Chile, Alaska, or a place like Ecuador remain on the radar for the company?
Oh, I think so. We've been focused on the Americas, and we're branding and focusing on being the premier Americas gold producer. But there's a quote, and I can't remember where I heard it, but I tend to use it, which is that God created gold, but the devil spread it around. And you really have to go where the gold is. Sometimes some jurisdictions are better than others, but they can also change on a dime. And there was a period of time where Ecuador was a no-go zone for a number of years. And now Ecuador, really is looking like a much more attractive jurisdiction. And certainly the experience I think that we've had with Solaris in Ecuador has in the last 3 or 4 years has been fantastic and is looking good going forward as well. So jurisdiction risk can change, and so you can't stress too much about the jurisdiction at any given time. You really have to look at the quality of the assets, how they fit into your portfolio, what kind of value you can create from them, and then work on whether you can manage that jurisdictional risk to the extent it might be higher than another jurisdiction. So I don't know that we're too choosy. I mean, there's certainly some places we just wouldn't go, but I think we're very open to expanding beyond where we already are. And with Greenstone and bringing Canada into the portfolio, that was important. We're our head office is in Canada. We obviously know Canada very well. It's one of the top mining jurisdictions in the world, in particular Ontario. And when you're focused on the long game, which we certainly are at Equinox, if you can find assets of scale in good jurisdictions at good valuations, and you have an opportunity to acquire those, like we had with Greenstone or Premier, you really got to take advantage of those opportunities, because I think that the addition of Canada into our portfolio, I think the economics of the transaction were great, but I also think the long-term benefit to the company in terms of our trading multiple and the value to our shareholders in terms of risk diversification is even more attractive by bringing in meaningful exposure to Canada. And so we definitely look at things like that. And Chile, there's been some rhetoric in the news, and the government's making noise about increasing taxes and royalties and that type of thing. But it's also a top tier mining jurisdiction, and I don't see a mass exodus out of Chile anytime soon. It's all, I think, always going to be an attractive place to be.
Yeah, certainly agreed. And Nicaragua tends to tick a lot of boxes, at least in my experience. And they've treated things pretty well there with Calibre, and of course B2 starting up in that country being a pretty significant force there. And of course, Peru really well. Peru has various challenges, but it also can be amenable. So I think, there's some good opportunity on that front. On the Premier transaction, I want to go back because you said something there. Have you guys noticed that trying to get some of these value deals done in this market, have you guys ran into challenges with management teams just not being amenable to discussion, arrogance and egos coming into some of these transactions to where they just basically get shut off because people are just not willing to do deals at these levels? Maybe talk about that, and maybe you can just give the audience a flavor for how long the negotiations for the Premier acquisition took place.
Well, I'll say right off the bat that we certainly did not run into that situation with Premier, and so I can come back to the Premier transaction itself. Just generally, of course, I spend a lot of my time researching companies, and if I see a potential opportunity that could be interesting, and often I'll look at it from the perspective of both companies, I'll make those phone calls, and it's amazing how many times you'll just get a response back, thanks, but no thanks. I don't even want to have a conversation, and that always surprises me. I think it always makes sense for companies to be talking. Relative valuation, I think, is more important than absolute valuation, and so especially when you're talking about at market mergers where you're using shares and these aren't cash transactions, right? When you look at it from that perspective, it is surprising me. You do run into, whether it's ego or whether it's just every company thinks they're undervalued, but if every company's undervalued, that should still be opportunities, right?
Sure.
To merge on a relative valuation basis. So certainly you see it. We try not to be that way. I think Christian, myself, we're very commercial guys. Ross has been in this industry forever and really understands how to do these types of transactions such that they benefit both parties, and the shareholders, especially if you're using shares, the shareholders of the target company become your shareholders. So you've got to do things that benefit everybody and make sense for everybody, and that's the approach we tried to take as we built this company. And Premier was exactly that. We both, Ross and Christian and I, had met Ewan in the past, Ewan Downey, who's the CEO, and had been watching Premier and what they've been doing, and there were some challenges there. I mean, it was public that that they were in a dispute with Centerra and about Greenstone, who was their joint venture partner, and they had been working on doing a spin out of their U.S. assets, and there was just a lot going on with the company. And I guess it was August last year, Ross had a conversation with you, and then I also had a conversation with you, and we just kind of walked through where they were at with the Greenstone project. And it wasn't, it hadn't been sort of top of mind for us up until then. We weren't really looking for a transaction. We had just closed the acquisition of Leagold, and so COVID had hit, and we really just were not focused on finding another acquisition at that time. But what was happening at Greenstone was just it was just a rare situation where you had an asset of scale and quality. It's one of the highest grade open pit deposits of scale in Canada. It'll be one of the top 3 or 4 largest mines in Canada once it's in production, gold mines in Canada. It was fully permitted. It had a great team ready to execute on construction. It had good social and community support in the region, fantastic infrastructure, and it was trading at a valuation that made sense for us, and it also helped us accomplish our long-term goals in the company, our strategic focus. So once we kind of saw the opportunity for what it was, we really hit the ground running, and we did a huge amount of due diligence fairly quickly, with Orion in the mix and enable their transaction with Centerra. That brought in a non-mining partner, but a great financial partner for us. They were flexible on the ultimate ownership in the company, and so we were able to negotiate with Orion to acquire an additional 10% of the project, which brought us up to 60% and the majority holder. And so it really was kind of serendipitous. It all fell into place and was a bit of a complicated transaction, but ultimately worked out. And the creation of i-80 Gold, of which we're a 30% shareholder, that was great for the Premier shareholders, and I think it's ultimately going to be great for Equinox shareholders through our interest. I think i-80 is going to do some really cool things in Nevada and continue to grow value there. So Ewan and his team were really good to work with. I think they saw the opportunity of maintaining their plans to spin out the U.S. assets to the Premier shareholders, and then also putting the Greenstone deposit into hands that could develop it in the near term, which is what the local Indigenous communities wanted to see. The municipality of Greenstone, certainly the team on the ground there, and that mine is kind of screaming to be built. So it really was a transaction, I think, that benefited everybody, all the stakeholders in the region of Greenstone, the Premier shareholders, and also the Equinox shareholders. I mean, it's a big development project to roll into our already development heavy portfolio. I think that's probably a significant reason why we're trading at a lower multiple, because development assets just trade at lower multiples, and we've sort of doubled down on development here recently. But again, we're talking about a year, 2 years, 3 years before that development plays out into production. And the Greenstone mine is going to be a cornerstone asset for us. It's going to be the largest mine in the portfolio, right up there with Los Filos. So it was kind of I think we came to terms pretty quick with Ewan and came to a plan to merge the companies pretty quickly, and then it was just a matter of trying to execute that in the middle of a global pandemic. But it all worked out, and like I said, I think this is going to be a great transaction for everybody.
It just makes sense across the board, and I don't see the disconnect in the development side. All of the projects you guys are working on developing are either in operation already, expansion projects, or they're permitted. So I don't see why there's a disconnect. But again, happy to enjoy that disconnect as a buyer. So that
Andrew, you can do like I look at this all day, and I agree with you. We've got we've got what, 16 million ounces in reserves. They're all sitting at permitted projects, permitted or operating projects. We got 30 million in resources. almost, and 29 million of those M&I resources are sitting at permitted, operating, or in development projects. And so I think from a risk profile, our development projects are certainly lower risk, but it doesn't change the fact that a good chunk of our NAV is our net asset value is in our development, right? And so that portion of our net asset value is going to trade at a lower multiple. It's going to be reflected in the share price. The good news is, and this is I think where you were going, is that these aren't grassroots, these aren't early stage, these aren't PEA, these are assets that are going to be in production. This growth is going to happen. It's fully financed, it's permitted, it's in progress. So by the end of this year, we have Santa Luz construction complete. We've got a big chunk of the Los Filos expansion advanced. We've completed the stripping programs at Mesquite and RDM, and so you get a bunch of it out of the way. Our production increases materially next year. We then are in the construction period of Greenstone, and that's only a couple of years. And then, boom, you're through that period. The vast majority of your NAV is now in producing assets. And I just think it's inevitable that we'll start to see that valuation change over time. And I think it'll be as soon as, moving into the third and fourth quarters of this year, because a lot of what we're doing now starts to pay those dividends in Q4 and certainly going into 2022.
Castle Mountain is an expansion. It's an amendment. It's nothing too complicated. Los Filos, same thing. Mesquite, you guys have options there on your existing grounds and surrounding grounds right there as far as other ounces that are amenable to that mine and facility. So again, it's not anything that's too terribly complicated. I mean, obviously there's execution risk, but the financing side with the production, cash flow underpinning that, and then also just the deep pockets of the financiers out there that are associated with the company, I just don't see the concern. So yeah, good stuff. I was going to ask you for an operations update. I think folks mostly catch all that, but where do you guys think you're going to land here? You guys have guided a certain amount of ounces. Where do you think you're going to land on that for this year? Maybe just give us a brief operations update.
Yeah, we just reported our Q1 results, 2 weeks ago. And at that time, we did reiterate our guidance of between 600 and 665,000 ounces. Cash costs will be, in that sort of $950 to $1,000 range. And then our all-in sustaining costs are around $1,200 this year. And this year is really characterized by an improving production profile and cost profile as the year advances. And that's because in Q1 and into Q2, we're undertaking a large stripping campaign at Mesquite, a large stripping campaign at RDM. We're in the process of stripping the Guadalupe open pit at Los Filos. We're just getting into development of the Bermejal underground at Los Filos. And a lot of those activities, start to pay dividends as you move through Q3 and into Q4. So it's an increasing production profile, and along with that comes a decreasing cost profile. And then at the end of the year, we'll be finished our construction of the Santa Luz mine. We've made great progress at Santa Luz. We're about 40% complete today, and mining at Santa Luz is going to start up sometime in the next few months here in the middle of summer. So, from an operating perspective and a development perspective, we're more or less on track with our guidance, and hence reiterated it. Los Filos has been, it's a big mine. We lost 9 months last year as a result of COVID and some social issues at the mine, and so we're in a bit of a catch-up mode at Los Filos, and so that's the one where a lot of effort and a lot of focus needs to be to make our guidance, but things are going well there, and things have really turned the corner after we got back into production there in December. But there's always a period to ramp back up, and we went through that in Q1. So the operations are going well. Q2 is kind of the same as Q1, and then in Q3, Q4, we really just start to see these activities pay off.
You guys got a lot of stuff on your plate. There's no doubt about that. So I can see why you and Christian are working 18-hour days. So some of these smaller projects, now you guys have indicated that some of your smaller projects are certainly on the table if should there be a good buyer that come along. Does that remain to be the case with some of these smaller projects that are sub 60,000 ounces a year roughly? What's your thoughts on some of those non-core assets?
Well, I think we demonstrated that with the recent sale of our Pilar mine in Brazil, and that was our smallest and also our highest cost asset. Have been operating well for us. I think it did $20 million of free cash flow last year, and so it was a good mine for us. But in terms of its scale, its future potential in the context of our overall portfolio, and a reasonable offer on the table to buy it, it made sense to sell that one. So that's a good example of us optimizing the portfolio. I think there's other opportunities. We have some of our other mines. We just acquired the Mercedes mine. We've got RDM in Brazil. Again, they're good mines, and it's always hard to sell a good mine. The gold price is doing well, so they're making good cash. But that also, in a good market, is sometimes the best time to sell a mine as well. So we've got no immediate plans to do that, but I wouldn't take it off the table. Where if we had an attractive offer on one of our smaller projects and it made sense to redeploy that capital into growth, I think that it's something we would certainly consider. But it's not necessarily a priority right now, given we just sold Pilar, and we also sold a small portion of our Solaris interest recently as well.
Understood. Greg, I want to move on to community work here. First at Los Filos. What initiatives will be ongoing at Los Filos to keep relations in good standing with the community, and post resolution on some of the issues? How are relations at this point?
Yeah, that was a real tough period last year with the community issues at Los Filos. It was, there's 3 primary communities there, and one of them did put a blockade up, and so that did shut down the mine for a period of months in late Q3 and Q4 last year. And it's always a bit of a challenge to drill down and figure out what the underlying issue is. Everybody, all the communities want to see Los Filos operating. Everybody benefits substantially from it. There's very attractive social and profit sharing and contractual relationships with the communities in that region. And so it's not a situation there where it's anti-mining, so to speak. It's more just, how big is the pie and how much does everybody get? And I think what happened there was we had a social collaboration agreement with all 3 communities, I think the interpretation of that agreement is where things went a little sideways. And so, over time, quite a long period of negotiation over several months, clause by clause by clause in that agreement between us and the community, it was redrafted and I think substantially improved in terms of its clarity and specific provisions on how it should be implemented, and really just to eliminate the gray areas and the areas where interpretation can be an issue. And certainly there were some improvements for the community in that agreement, and so hopefully they're happy with that. Certainly we're happy with where things ended up. But the bottom line is, these communities they're not just local communities. There are employees, there are contractors, there are partners in the mine, and it's the same at all our mines. And so you have to really focus on making sure that they're benefiting adequately from the mine and that they're treated with the respect they deserve, and really treat them like partners. And that's our focus. That's our intent. We're trying to make sure we've got the right people down there to make sure that's happening, and really focus on ensuring that that relation stays strong and positive. So I mean, things are good now. The blockade came down late last year. We've ramped up. People are back to work. The agreement's been signed. I think everybody in good faith really collaborated, over a long days to get that done. But it was mutual collaboration and between us and the community to get there. And so things are good there. But as you say, the key is maintaining that, and that just means we need to be vigilant and keep those channels of communication open, and make sure that if there are issues, they're brought up early enough for us to deal with them before things get, out of hand or go too far. So, really happy with where things are at. Obviously it was disappointing last year to have the mine shut down for so long, especially after the shutdown with COVID. We lost a lot of time there, and unfortunately that kind of affects everybody, including our employees and the communities. But we're back on track and, playing a bit of catch up here, and I think it'll be good moving forward.
This is hard work. And for the people that ask the question about what are you doing on ESG, the people who are, most of them that are asking this question, have no idea the amount of blood, sweat, stress, and tears that happens trying to actually execute on the ground with community work. So I just want to point that out. And I suspect also that this project, Los Filos, is very important to this community. And so there's a mutual benefit and relationship that happens here. But is there anything at Los Filos as far as the community work that you wanted to point out as far as initiatives that you guys are currently working on?
There's always so much. We're always building and assisting with infrastructure. Part of the this agreement, but it existed previously, is working with the communities on ensuring they've got the ability to bid on good contracts and have the resources to bid on those contracts. Again, making sure that as much as possible they're able to benefit from the project. And we're in a growth phase here. We're bringing on the Guadalupe pit, we're bringing on the Burma Hall underground. Eventually, we're going to be looking to build a processing plant at Los Filos. All of these things are big capital projects that'll benefit that mine for the long term. And so making sure the communities are sort of aware of the plans, on board with the plans, participating in that growth. I mean, that's key, and that's really where the focus is. There's a million other things, right? There's scholarships, there's medical care, there's education, there's infrastructure, there's things that are happening all the time. But the big prize really is just making sure that mine is profitable, it's robust, it continues to add life, and it'll be there for the long term.
Appreciate you sharing some details on that, Greg. At Arizona, there's been some accusations by some groups that Equinox is responsible for impacts resulting from extraordinary flooding that occurred in the region recently. What is the status on this matter, and what is the company doing to sustain community relations as well as operations at Arizona?
Don't believe everything you hear or read, for that matter, especially in social media. What did happen was in March, there was a 10,000-year rain event, and that event resulted in widespread flooding through the whole region where the Arizona mine is located. Several rivers, lakes, lagoons, ponds flooded, overflowed, and increased the turbidity in the number of drinking water sources. And so you also had roads washed out and all sorts of issues with local infrastructure. So that was a big issue. And from an Equinox perspective, we acted very quickly. First, in ensuring that road access was restored for both for the community and for the mine. We assisted with transportation of community members in the meantime over areas where the road had been washed out. The increased turbidity in some of the drinking water sources caused issues with the water treatment plant for the local community. We assisted with that by helping with both maintenance and upgrading that water treatment facility. Ultimately, we believe, and the community I think agrees, that it really does need to be substantially upgraded, and so we are building a new water treatment facility for the community. And we assisted with drinking water. We made sure that bottled water and potable water was delivered throughout the community over that process. So, in terms of our relationship with the community at Arizona, I think it's very, very strong. I think they recognize that, it was a very, very challenging situation for everybody, and the company did as much as was possible to assist over that period. And again, you got to remember, Andrew, that the people in the community are our employees, they're our contractors, they're our partners in this project. So it's to everyone's collective benefit to make sure that substantial issues like that get resolved quickly. So there was no, the media and probably more social media had reported tailings dams breach and things like that, and none of that occurred at all. And so what actually happened was very different. what some of those reports said, for sure.
Greg, I appreciate you setting the record straight on that, and also for the efforts there. You know, every mine in a development project in this business has at least one environmental critic, no matter what. Some issues are valid, some are not. I would just say continue to make efforts to support the community and resolve any issues, you know, of course, should they have merit. Fully understood on the rain. Even here in Panama, the double hurricanes that came across that landed in Nicaragua, 500 plus miles in a straight line from where I am, resulted in a number of hydro facilities being very, very overwhelmed with water that were unexpected, mudslides that impacted the community. You're absolutely right. The turbidity levels, when you open up your faucet and there's chocolate coming out, you can get a good idea of what's going on, and of course, how that affects facilities, whether it's water treatment, filters, et cetera. So I appreciate the information on that. And Greg, wrapping up, you and I talked about the discount. We've talked about some of the underperformance of the shares relative to some of the other peers in the sector on days when, you know, GDX is up and gold is up, et cetera. We've seen some of that happen. And you and I have discussed this at length on this chat. For potential investors who are on the sidelines listening here, market cap of Equinox stands about 2.75 billion US dollars. What would you say to them about entering Equinox Gold at current levels?
I think the opportunity is now. I mean, we are, just like you said, we have underperformed, but we're not in a situation where we're not on the path for that to resolve. I mean, we're 600 to 665,000 ounces this year, but with Santa Luz coming on at the end of the year, the advancement at Los Filos, the completion of stripping at Mesquite, production increases substantially in 2022. And so, that is a, you never want to use the word inevitable, but it's financed, it's happening, and production is going to be increasing. So, it's a pretty clear path to increase production, increase cash flow. And I think both of those things are going to be reflected in the multiple that we trade at. We just did some M&A as well with the completion of the Premier deal. You're always going to have some chop in your stock as new shareholders digest the shares. Maybe they're not natural Equinox shareholders and they sell and they're keeping I-80 or whatever the case is, right? There's always going to be some arbitrage that happens and some choppiness in the trading post-transaction. But as we move through the next couple of quarters here, and in particular Q3, Q4 this year, the market is going to see increasing production, decreasing costs, advancement on our growth projects, and that's value add, and that should start to reflect in our multiple going forward.
Greg, and the best way for investors to reach out to the company?
We've got a website, equinoxgold.com, and there's a contact page there. You can reach out to Rylin Bailey through that website. Christian and I are always available to talk to investors if they want to have a chat with us as well. And but there's lots of detail on our website, presentations, contact information, details on our projects, everything's there.
Greg, it's great to chat. Appreciate you coming on the show. Looking forward to having you back. In the meantime, keep up the efforts and continue to build that value at Equinox.
Thanks for having me. I do appreciate it.